What's going on, people? Welcome back to Momo Trades, where we're trading every single day, trying to make some money in these markets. Today was honestly a very tough trading day, but with these three simple techniques, I'm going to show you how you can be on the right side of the market nearly 99% of the time. I did make a similar video the other day surrounding these three essential factors. So if you guys want to check that video, you can look at that as well. But today we're going to do a bar by bar analysis of the price action we saw today. We're looking at ES, E-mini futures, S&P 500 futures, and as you see on this chart, I mean, look at the beauty of this. No indicators besides this 21-day EMA, and all we do is trade on price action, and we go for 1-point scalps, which are equivalent to $50 per contract. Now, this is the futures market, but this can be applied to stocks, options, crypto, you name it. We're here to make money, and let's show you how. So, the first thing with this technique is it's essential to really get it ingrained in your head that all of these bars on the chart are just words as a part of a sentence, and with all of them together, you're soon going to be able to interpret it like a language. All it is numbers and words, whatever you want to call it, but everything is just giving us information and context about what is really going on in the markets. So what I'm going to do is show you guys how I approach every trading day as the bars are printing live. And today I got to my computer. This was right around market open, and I could see that there was a sort of downtrend. However, a lot of people can see this downtrend and try to draw a trend line that looks something like this, with a break and a new low, signifying a potential reversal in trend or the end of this downtrend, because in price action rules, once there's a break and a new low of a trend, that's when we can start looking for trades in the opposite direction. However, this trend line is very inaccurate for a couple reasons. First of all, even though it has several touches on the bottom, look at the top of the trend line. It only has one bounce here. So what we want to do is always adjust our trend lines so that we can make the most sense of it possible. And what that comes in is very concise short-term trend lines. So as we see here, we had a nice downtrend, a break, a new low, followed by a lot of congestion. Now, as we see, we can also draw a sort of range, because as we see, we're going from the highs to the lows, and we're kind of reacting around this midline. But until a perfect setup shows itself, we're not going to do anything. And as for these three factors, second entries, failed second entries, and only in the right market context, I'm going to show you guys what that means very shortly, but as the bars are printing live. And we get our first setup right here. If we count from this high, remember, we always want to draw our short-term trend lines. So the rule is that once there's a break and a new high, that's when we can consider this uptrend to be over, or at least potentially leading to some congestion or reversals. And what we want to look for is a second entry long or a failed second entry short. So if we count from this new high, we're going down, and once the first bar breaks above the one previous to it, that creates a first entry. And when this bar, this is considered an engulfing bar, when this broke below the one previous to it, and then all in the same bar broke above it, that created a second entry long. So once again, we had a new high, we were going down, we had a first entry long, we went down again, and if the next bar broke above that, that would create a second entry long. Now, I did not take this trade in real time for a couple of reasons, but mainly because we were going right into this midline, and I really didn't like this signal bar right here. When we have a signal bar like this, we can tell that even though it's bullish, look at it. Half of it was below the EMA, and there's a lot of stem, and it barely finished on the upper part of this bar, and that's where the third rule comes in. Even though it's a second entry long, we're looking for a new high after this break. It's not the best market context. There's not a really nice trend in terms of the price action right now. It's very close to the market open. Even though there's a short-term trend, prices are reacting to this area a lot, and engulfing bars are always going to be a little more high risk. And yeah, you actually it would have been a losing trade had you gone long one tick above this bar. So once again, let's look for another second entry, failed second entry, or anything that has a very nice signal bar and allows for a nice reason to take the trade. As we see, we tried to push below the EMA, followed by a lot of bullish momentum, a lot of green bars. So let's draw another short-term trend. I'm always drawing these trend lines just to keep myself on the right side of the market and to be able to interpret the language, which once again is just the bars printing on the chart. So we had a break of this short-term trend, a new high, which means even if we had a second entry long, I don't necessarily want to take it unless there's a great signal bar, it's bouncing off the EMA, which allows for the market context to really take over in that case. And as we see, we actually had second entry long right here. New high, first entry long, second entry long. However, because it doesn't meet our third criteria of it being a nice market context, we can't take this trade. There was already a break and a new high of this uptrend. We're below the EMA. We see that there's a short-term downtrend even, so we want to skip this trade. It would have actually worked out, but like I said, we're only going for the 99% probability trades. So now let's see what happens next. And as we see, we started reversing, and we're just really getting choppy near this EMA. And now when this is happening, we can start to even draw a little mini range just to show us that there's congestion. And in my mind, why I draw this is just to really reiterate to myself, no matter how fast the bars are printing, okay, we're in this congestion. I really want to stay out of this. And nothing really looked that appealing. Let's see what happens once we get closer and more bars begin to print. So now we get close to the bottom of this trading range, and we quickly bounce out. So let's draw a short-term trend line. We have a break and a new high, signaling that, okay, the uptrend might be close to an end, but unless a short entry presents itself, we can't take any shorts just yet. And as we see, there's a lot of bullish momentum. Now what we can do is, okay, even though there's a break and a new high, we obviously did not reverse. So that means there's probably a much wider trend that looks something like this. And we had a little spike and a little congestion followed by another spike. So we have a break, no new high yet, so no reason to look for shorts just yet. But let's zoom out and see where we are. Okay, we're getting to the near the top of this trading range, so we at least should be aware of the fact that there could be a lot of selling pressure around this area. We have a break, a new high, and we see that we begin to reverse, but we can even adjust this trend line to maybe look something like this. Because even though we had a break and a new high of the short-term trend line we just had drawn, we once again pushed a lot higher. So this seems a little bit more accurate to me. And we see that we had a lot of congestion following that. So once again, let's look for second entry longs. So we have a new high here. We went down. We had a first entry long because this bar barely ticked above that. And then we had a second entry long if the next bar broke above this one, which did indeed happen. Now, once again, we would not want to go long here because, first of all, it's below the EMA. Second of all, even though we have this trend line drawn, it doesn't mean it's 100% correct. It could just as easily be something like this, and we just had like kind of two legs up before starting to reverse. But the main thing is that we're below the EMA, and we can see that. I mean, look how many bars are stacked right here. It really looks like we're just congested. Like if we just zoomed in on this and we ignored everything before, all this looks like is a lot of congestion. So until we bounce there several times, we really don't want to take this trade. And now we see that we're bouncing several times, and it's just a lot of confusion in the markets. So until we have a failed breakout, we don't want to go long in any of this. When a failed breakout is kind of what happened here, but it's basically once we go below this trading range and we have either a second entry long, or if we went out of the top of the trading range, a second entry short, that with a nice bar, a nice signal bar going the other way, signaling we might go to the opposite side of the trading range, we can look for a trade. But the point of this video is really not trading ranges because you can get chopped up in all of this. So if a nice setup does present itself, I'll show you guys what I mean by that. But right now, let's look for the very, very high probability setups. And finally, we go out of this trading range. And what I was talking about was, say the next bar after this one was a nice bullish bar. Maybe it went all the way up here, and instead of a red bar like this, the next one was a green one. Then you can potentially go long because it would be a failed breakout in that case. But for now, let's see if we can see any other nice entries. And we see that we start reversing. Now, technically, this is a failed breakout, like I was just talking about. But even though we had one bullish bar, I mean, look at this. We had a short-term trend line that we really want to respect, and we did go pretty far away from this, from the bottom of this trading range, so I would not take a long in that case. But let's see if we can see any other setup. Now, what we do see is a failed second entry short. If we count from this new low, we were going up, and when that bar broke below this one, that was a first entry short. We went above the EMA, and this created a second entry short. So there were a lot of traders who saw this bar and went long above the doji because there was a failed second entry short if the next bar broke above it, which did happen. Now, in the case of me, I really don't like trading dojis, especially when we're near the top of this trading range and we don't know just yet what the market is trying to do. However, some people can argue for that trade, but it would be an aggressive one. Now, we have a break and a new high, followed by a lot of just up and down. As you see, there could be a potential trading range that looks like this, in fact. So now we just add on to what the price action is telling us to draw the most accurate trend lines once again. And we get to the top, some more congestion. Let's draw our short-term trend line, break, new high, attempt at a new high. We finally get it. And once again, a lot of congestion. We have a triple top. Draw the short-term trend if you'd like. And we do see a nice, not bad. We do see a nice bearish signal bar right here. And we have a break and a new high, and one touch, two touch, three touches, fourth touch at that price level. Just based on intuition, you could take this trade. However, it is more of an advanced trade, especially because we traded so far up. It would be pretty risky. But for the advanced traders out there, that looked like a nice trade to take, and it worked out. And now we see another second entry short. We have this new low, a first entry short, second entry short. Nice bearish signal bar. And we're at the top of this trading range. We have a first entry long, second entry long, failure. And it's great market context because this is confirming that this aggressive entry is valid because we kept pushing lower. There's a matching high here. This high was lower than that one. This high was lower than that one. So that follows our rules, right? We had a second entry short, first entry short, second entry short. We had a failed second entry long, first entry long, second entry long, failure if the next bar breaks below that. And once again, it's great market context because we're at the top of this trading range. We had the lower highs. So that was a nice trade. Once again, we're going low. Counting from these new lows, we're going first entry short, second entry short if the next bar breaks below this one. Now, this one is more aggressive as well because even though it's a bearish bar, even though it did work out and led to what would have been probably a very nice runner, the signal bar isn't excellent because it is so much of it is above the EMA. It is a second entry short. There is great market context once again. You can argue for that trade, but in real time, I did skip it, and I was kind of angry at myself for that. But a lot of times when the signal bar is mostly on the opposite side of the EMA, you're going to get trapped. This time it did work out just because there was so much congestion and so much selling pressure at that point. The market context overruled the second entry. So let's draw our trend line. We're looking for second entry short, first entry short, second entry short, failure. Now, let's see what's going on here. We traded to kind of the, let's see if we have a better sense of what this trading range really looks like. So we traded all the way up here. So let's draw our wider trading range just to see where the midline is. And look, I mean, price action works. The midline was right around here. So what that tells us, once we bounced out right out of there, okay, there's a lot of buying pressure at the midline, which signals we might not even make it to the bottom of this trading range because, I mean, look at this momentum. And there's a nice second entry short failure right here. New low, first entry short, second entry short, failure if the next bar breaks above that. Bullish bar, look at this. See how this bar is almost entirely above the EMA compared to the last one we were looking at, which is almost all on the opposite side. This one is a nice trade. Once again, we had a failed second entry short, and we're looking for a new high of this short-term uptrend. Now, we once again have a momentum in the opposite direction. We're counting from these highs. First entry long, second entry long. We're looking for a second entry long failure now that we're below the EMA. We had a break in a new high of this short-term uptrend. And technically, we're still looking for a new low of this short-term downtrend because we had a break and no new low yet. But we did have all that momentum, all that bullish momentum, but we broke out of that and had the new high. So we can look for a failed second entry long, which did happen. However, this would have been the signal bar, and it's far too bullish to go short below that. So you must skip that trade as well. And now we continue to push lower. And we do have a second entry short. New low. First entry short right there. Second entry short following the doji bar. But once again, it's not a great signal bar. So we would probably skip that trade as well because of the doji. And now we see that we had a break. New low of this trend. Potentially there's a trend line that looks like this, but it doesn't look very concise as opposed to something like this one or this one. See how nice the price action fits those ones compared to this? This one almost seems to me just like a very short-term trend line like this, followed by a break, another leg, followed by a break, new low, and now we can look for a potential reversal, which I believe does happen. Yep. And basically, let's keep going. At this point, it's getting late in the day, but let's see if we can get any more setups. It does look very choppy. We can see there's a first entry long, followed by a second entry long, but these bars are very congested, so there's not a great market context, as we've been talking about. You wouldn't want to go long above that, even though it worked out. You can argue for it because of the double bottom, but they're not the 99% win rate trades that we really like to look for. So now we begin to just get a lot of choppiness, and I think that's just going to wrap up the video. So I hope you guys learned some things. I hope you guys enjoyed the content. Leave me some comments, subscribe, give me a like. Come on, guys. Let's grow this channel. Peace out, and good luck to you guys in the markets.